Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, 21st day of June 2016, and we are looking at the Dow Jones Industrial Average eking out a small gain on the day, up about 24 points, closing at 17,829. This all on the shirt tails, or heels I should say, of the Brexit vote, the referendum vote scheduled in Britain on Thursday. Of course, we've got that wait and see attitude, although what we have seen over the last couple of days has definitely been a squaring of positions, absolutely evident in gold, in which the bulk of premium has kind of eroded out of the market, really taking it back to the 1260s, coming off of those highs at 1300. But the equities markets themselves, having priced in the possibility of an exit more last week, as slowly begin to put their faith in the fact that there probably will not be an exit, and at least that's what we see the market betting upon. S&P also trading higher this morning, moderately higher, up 1/3%, 6 points at 2080.25. As traders await that critical referendum, which will be voted upon on Thursday in Britain as to whether or not they leave the European Union, I guess one of the strongest characteristics of the equities markets recently has been quietly higher, however, very much in a narrow and defined trading range. You can really see that when you look at this Standard & Poor's chart, a daily chart, but what really sticks out to me as an overall characteristics is the relationship between where the market opens on a given trading day and where it closes on a given trading day. As you can see, when we look at the last, say, 5 or 6 trading days, we have 4 of them with extremely tight ranges, right here and right here, where the market in essence opened and closed at the same place. You had a couple of days where you had moderate open and close ranges, but nonetheless extremely tight, extremely consolidated. Now, we're back over a 50-day moving average. However, the underlying characteristics of the market, when we're waiting for a piece of fundamental news that could really move the markets in an extreme manner, is not so much these technicals, whether or not it's above or below a moving average. We really have to wait and see on how that vote really unfolds. Right now, it's quite obvious that the belief is that the referendum to leave the European Union will not be successful, and in fact, they will stay. You can see that in the way gold has lost a tremendous amount of premium over the last couple of days. That premium was in essence what they had baked in case the European Union and Britain kind of parted ways. Equities, however, have had a much more conservative stance in that you haven't really seen them sell off hard, and if Britain would leave, I would expect a dynamic downside move in equities. A real knee-jerk reaction would probably be a time to buy, because I think they would overdo it. But right now, according to polls and according to analysts, there's a 75% chance that Britain will remain in the European Union. After trading higher for the last 2 trading days, we do have crude oil off about 1% on the day, lower by about 50 cents per barrel. 48.85 is where the market seems to have closed. We have been looking at oil on a technical basis in terms of this bull channel that we identified last month. And what we really saw more than anything else was the fact that although it was bullish, it was trading from the tops and bottoms of the channel. Now, I did widen it the other day, which is why you're not seeing so many instances of it reaching the top or the bottom. However, what we can say is that the market did break through last week. We also talked about the fact that we believe we would find support between 44 and 46 in crude oil. 46 seems to be the number that traders landed on because they did move the market higher. It's back within this wider bull channel, and we are now at the bottom again of this channel. And really what we want to look at is whether or not oil stays within this upward bias, or if we see more selling pressure come into the market. And traders, lastly, I do want to take a look at the dollar. Dollar up about 0.5% today, over 94.10 is where the market closed at. We really believe that there was minor resistance at about 93.80. We've looked at it in different ways, but this is a fib retracement, which in essence comes in from 92 on the lows. I believe that the highs we're setting are again, actually the highs that we're setting are 96. It's a shorter term fib retracement from here to here. And so therefore our next real level of resistance would come in at a 38%, which is at 94.35, about 25 points from the current price or fix of the dollar index. Next couple of days are going to prove to be interesting. I believe that all of the factoring has taken place, squaring of positions, so to speak, and we'll have to wait to see what the outcome of the referendum brings. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.